if you have some of these large, massive companies that were doing a great job, you may want to ask them, what's my deductible? If I had hail, if I had water, if I had fire, what's my replacement cost? Now is a good time to ask that, because you'd be surprised your replacement cost is significantly less.
And then we got 2 quotes on it, and one was 13, the other one was pushing 18,000. Oh my goodness, right?
Everybody I'm meeting with, real estate agents that are part-time or getting in the business, the first question they ask me is, how are you going to navigate these choppy waters with NAR and these lawsuits? And I'm like, this is just a change. It's simple.
Yeah.
Hey, Kobe Sway here with Adam Briley, like always. We are towards the end of July. We're actually complaining about the heat right now. Remind us in the winter, because a lot of people complain about the heat, and then come the winter, we're literally begging for heat.
Yep.
So that's always strange. I thought today we could talk about the insurance industry. And it's kind of fascinating to see what's going on with a lot of these changes. Like, I guess, obviously, primarily, we work around the real estate transactions, and we're used to working the real estate side. So there's a lot of things going out there with brokerages and contract changes and lawsuits and all these scary things. But a lot of things are not really changing. It's just real estate agents are buying into it. Like, I had a realtor the other day reach out and said, hey, this is the end of the world. It's not, but they found some clickbait. So there's 2 kinds of insurances. Just to keep it simple, you have the ability to go to a big insurance company, State Farm, Allstate, American Family. Just keep it simple. And then you also have the ability to go on the independent side, which is, we'll say, more of like the Progressive or Travelers or something like that. So there's 2 different ways to shop for insurance. You can go into your local office and say, hey, what do you have? What are your rates? How do you, what are you looking for? And then the other option is more of the broker side, which is our company, which is, here's what I'm looking for. Can you find me a company? And I always try to explain it to people like this. We're like Expedia, if you will. Like, we shop hotels and we try to find the best prices to go sit at a hotel. And that's what it looks like for the insurance side, is we can look at, 25 or 30 insurance companies and try to find you a really good, fantastic place for where you can park temporarily. And it's not like you're there forever. It's just, hey, this is where you're parked temporarily, and then we can continue to shop on your behalf. Well, if you look at like the larger ones where they just have the ability to work that one channel, it's actually kind of eroding. And the reason why it's eroding is because rates have gone up, and I'm sure Adam's heard this from clients. In the last 3 to 4 years, they've gone up anywhere between 75% up to 400% annually. Not just once, annually for the last 3 years.
Yeah.
You probably have heard that.
Yep.
And one of the things that has been very good for, say, the large insurance company is you can go there and you can plug your insurance there. We'll say homeowner's insurance or car. And for the most part, it doesn't really change, right? Because it's kind of consistent and it's set on automatic payment and it doesn't really affect anything. But what's happened in the last 3 years is these large companies have lost a lot of money. So in order to combat that, they've done kind of 2 key things. They've done a lot more than that, but we want to keep it simple. 2 key things. They have increased your insurance premium, what everybody is used to as far as your monthly or 6-month or annual rate. They've gone up that massive dollar amount.
And that's what's gone up 75 to 400% too.
Exactly.
Yeah. Okay.
So let's just say you're spending $1,000 and now you could be spending $2,000, $3,000, $4,000 in a matter of 3 years.
Yep.
And so insurance companies have kind of done that to help erode some of these losses. And we'll talk about the losses and why that's happening here in a minute. The second thing they're doing is they're switching deductibles to percentages, which is something that's never really been done before. And you're used to filing a claim for your insurance and there's a $500 for insurance, and then you replace your $18,000.
I mean, a very common deductible that you hear all the time as a real estate agent was $1,000 deductible to $2,500 max
on a house.
Yeah, on a house.
Right, and you do $2,500 to keep the rate low, and $1,000 was kind of standard.
Yeah.
And so just think of that, right? Like if you're used to something happens to your car, it's the same thing. It's relative. It's about $500. Well, what they're finding is it's a percentage, and then there's a replacement cost. And then there is something they're carving out, which is if it's hail, it's this. If it's wind, it's this. If it's fire, it's this. And what you're finding is states like Nebraska and Iowa, we have a lot of hail, and those deductibles are getting almost out of hand where clients are not realizing it, and they're kind of like going with the flow. So we'll just say Adam calls his local large company and says, hey, my rate went from $1,000 to $1,000 for the year to $3,000. What the insurance agencies are doing is they're saying, oh, Adam, I got your back, no problem. Let me lower this back down to $1,800 or $1,600. Cost of living's gone up, whatever, they make up something. But then they increase your deductible from $1,000 to $5,000 or $10,000. And they're not necessarily being upfront about that because these large companies want to keep the client and they don't want to cause concern.
Yeah, like I even think of Stacy and our average rental deductibles $10,000.
Yeah,
we're going with trying to keep our premium lower.
Yeah,
but we're going with the higher deductible, which is like a flip we just did a week before closing. Guess what happens? Get a nice hailstorm come through, and now I need a $17,000 roof and $10,000 deductible later. So that bit us in the butt, right?
Yeah.
But overall, that's the route we're going.
Yeah.
But still, they used to be, I think for us, it used to be like $2,500.
$2,500 was like kind of the max for most people was $2,500. So this is like a massive change. I'm surprised we're not seeing or hearing about it more, kind of online or with social media. There are some people, posting about it, but not as much as you would think. And clients, and I'm not saying that they're unaware of this, but at the end of the day, let's be honest, what do we focus on? We focus on the rate. It's just like when you go buy a car, you don't care how much you pay for the car, or if it's 5 years or 7 years, you just the car salesman says, how much do you want to pay a month?
Yeah.
That's what they say, right?
So what about the folks that are with, like, I'm going to use State Farm, for example, or farmers or just the big guys, right? Because I've learned lately over the last 6 months, there are so many smaller insurance companies out there that I've never heard of. Like, what is it? Hippo?
Yep.
Like, they have like awesome rates and, but I've never even heard of them. But stay focused on the bigger guys, for example. There are some clients that have been with them for like 10 years. They do offer like loyalty sort of programs too.
Yep.
So this is applying to the folks that haven't been with these companies super long.
Yes and no, though. Because what you're finding is we had a client the other day come into our office, 18 years with the company, and they went to replace something at their house and they learned about a $10,000 deductible they were unaware of. So these companies are going after all clients.
Got it.
And there are certain rewards and discounts, of course. I'm not saying it's the same amount or percentage, but the reason why, Adam, they're struggling is because think about this, okay? So for a while there, the cost of a car during COVID, let's say, got into a car accident. Instead of replacing the parts weren't coming in.
Yeah.
So what they did was they just said, you know what? Instead of 75 or 80% of replacement costs is normally when they total a car, just to keep it simple. So if you have a $10,000 car and there's $7,000 or $7,500 in damage, they total it, right? But during COVID, what they did was they couldn't get parts, so they started totaling them at less than 80%, at less than 75, at less than 65, and less than 60. So they were replacing full vehicles when they probably shouldn't have replaced cars, but they had to do something. And it was the same on homes as well. So replacements have gotten kind of crazy, and now we're out of COVID, but at the same time, some of those
costs are still high.
The costs are still really high, right? The other thing that they have found is when people got out of COVID, they're taking more vacations, more trips, they're traveling in the car more. Some people didn't drive for a year or a year and a half. There's more car accidents being had now. So that's also impacting that. And then the next thing is we've had more storms, and you got to think across the United States, but you look at the hurricanes or floods or nearest, we had tornadoes, right? Or we had flooding in Iowa, Nebraska, which is obviously devastating.
Now on that real quick, because I just heard this last week where I'm going to keep going to saying State Farm or Farmers. Sure. I don't know which company it is, but my understanding that I heard was those bigger entities, like let's take Florida, for example, they are confined to that state. So whatever happens with that big insurance company that happens in especially Florida specifically, because there's so many hurricanes, it doesn't necessarily affect the rest of the market. I heard that specifically about Florida. Have you heard that?
I've heard that. And sometimes
But you even think of Nebraska, think of all the storm damage we've had lately. So
it's all about percentages, right? So each state has different allocations and depends on the population, of course. Like you look at like California, Texas, and Florida, typically those three states, and maybe New York, but those three states impact insurance rates a little bit locally because you kind of are paying for somebody else's damage, if you will. So like if an uninsured driver hits your car and drives off and there's $40,000 in damage, other people, say 4 states over, are kind of paying for that too.
Yeah. And I just heard that about Florida specifically.
They kind of put
they're like circled, redlined, like, hey,
this is a separate beast
because there's so much, and that's why their insurance down there is so high.
Exactly.
I mean, I've heard back over the last few years, people were selling in Florida because
they couldn't afford it.
They couldn't. Yeah.
Just the insurance.
Yeah.
So it's talking like your normal, loan on a property. It was your rate obviously has changed, and then on top of that, your monthly statement has gone up so much because now your insurance premium
your premiums tripled for some folks. Yeah.
So you're talking your monthly payment goes from $1,800 to own a house to $2,700. I mean, that's a big difference.
Yeah, I mean, even I'm thinking on the real estate agent side, like you almost need to reach out to whoever they're going to use insurance to get like, hey, give me a rough idea of what their premium's going to be, because you need to put that on their cost sheet. And so their lender needs to know that too.
Yeah. And the lenders work very closely, a lot more than a realtor does.
Yeah.
So that's something to be aware of. So there's a few combinations here. We have damage or storms, natural disasters, things that are going on a lot more than maybe we've had historically. We have people driving at a rate that we hadn't had for a while. And the another thing to think about is during COVID, a lot of people didn't pay for insurance for whether it was home or auto. There was a lot of forgiveness programs, which is great. But now we're having to pay for that again because those people didn't pay for 2 years or 3 years.
Yeah.
Right. So there's just a perfect storm, if you will, with insurance. So the reason why we bring this up is these large entities or companies are starting to see massive jumps that they've never seen before. And they're starting to have massive layoffs. Like a lot of these companies are figuring out how can technology make it easier and lower the cost.
Like AI type stuff?
Like AI type stuff, so there's that piece of it. There's a combination of people working from home, people not reporting into work. So there's a large combination of that going on.
They don't need their big commercial spaces.
Exactly. So then you have that. So there's just a lot going on. So if you think about it as a real estate agent or a mortgage lender, why does this matter? The reason why it matters is because if you previously used one of these bigger companies, you probably had someone that did fantastic and did a great job with your clients, and you always trusted and relied on them, and it helped your referral business. But today, if you're not working with somebody on the broker channel, what you're going to find is a lot of these clients, sadly, are not getting told the truth. And when they go file a claim, they're going to say, hey, you recommended Tammy. She recommended this, this, and this. Well, she didn't tell me my deductible is $10,000. Adam, what am I going to do? I can't afford that. Why would you recommend Tammy and making that name up at this massive company? It makes us kind of look bad again. So the reason why I think we are bringing it up today is we're on the independent side. So we have the ability to just shop a lot of companies, and we can try to find who is changing, what they're changing to, whether it's a percentage deductible, whether it's the premiums. I can take your policy and I can bring you over to another company and then another company and another company, kind of like I mentioned Expedia. So if some hotel chain gets out of hand, I can go to another hotel chain to keep it simple.
And I again, thinking of like these last 6 months, like I'm going to call them no names. And these companies still have been around for a long time, but they've been like killing it on giving awesome premiums, deductibles, stuff like that. So I think that's really cool. And I will say too, because I don't know if you know this, my dad switched over to our brokerage, and he was with his guy for 15 plus years.
A long time.
That caused some drama there, I know, but he just had a big storm damage, and he even said, he goes, the claim process, like they sent the check right away. Like there was no fighting. And he was like, that was by far the smoothest process of me getting my money for the damage that was done to the house that I've ever experienced in the insurance world too. So that made me feel really happy too. But again, these smaller companies that I've never even heard of, those are the ones that are like, wow, this is actually really impressive. The other thing too, what do you have to say on like, you were hearing about some of these companies, like let's use Nebraska specifically, that they're starting to pull away from doing business here. Like what do you have to say on that? Because I've heard that they'll pull away sometimes for 6 months, sometimes for a year, just until things cool down. And then they'll start quoting again.
There's certain states that are worse for claims. And really that's what it is. It's a claims game. And it's surprising to me because you think almost any business, just think of any business, I'm drinking this water, and this water company would want more business. They would want to do more waters, right? Like,
and they're not a sponsor for us.
They're not a sponsor, but my point is, like, you would think they would want clients. It's the opposite on the insurance field. So the insurance has identified, and it's like a red, yellow, green, again, to keep it simple. And there's algorithms and AI that help the insurance companies. But there is red, which is we don't want any clients in this state. And they've actually sent letters. So more than likely, clients listening to this have gotten letters from their insurance company. Actually, my neighbor across the street works at a massive company. I won't say which one. They sent 75% of their clients notices they didn't want them anymore.
Wow.
Not that they just increased their rate. They said, don't come back to us. And it was alarming to see because this is one of the largest insurance companies in the country, and they did this 2 years ago. Anyway, so they've identified certain states they're pausing. So what you're finding is these larger companies are saying, hey, where are we hemorrhaging the most amount of money? And sadly, if you look up Nebraska, it's one of the worst states for drivers, for cars. So there's a lot of companies that have dropped out from the car insurance side, and they'll still work on the home. But there's a lot of insurance companies, you mentioned your dad, there's a lot of insurance companies that are refusing to do like backup water damage or things that happen that are not flood related, but they're replacing it or denying it, saying it's flood, even though it's not a natural disaster for a flood. So what these small companies have come in, and there's a bunch of them, like 30 of them you've never heard of, that are only in 4 states, and they're providing the best customer service like your dad found. They're providing better rates, and they know specifically their risk because they're in these communities.
Yeah.
You're not talking somebody that's in, let's say, Florida, that's like, oh, I don't know anybody in Nebraska. Like, they live in these communities. So they are mitigating their risk, and they're actually coming in. So the regional smaller players you haven't heard of are doing a lot better than the national bigger companies.
It's funny too, because like Elon Musk in this book, I listened to his autobiography basically, it was almost like the bigger, I'm going to paraphrase this, but the bigger the conglomerate, they can get away with more stuff.
Totally.
And they've gotten sloppy, and there's regulation though, and all this stuff, where the smaller guys, they are forced to be creative on how to make their business work too. So that kind of is in line with what you're saying.
Yep.
They just got to be creative on making it work in today's type of environment.
Yeah. So some of those areas that have marked red, and Nebraska is one of them for most companies actually, is they're like, we don't want to do business. So out of 50 states, they're pausing anywhere between 40 states, or 12. And we're actually in the top 5 to 8 with most of these companies where they don't want to do business with Nebraska, just because the premium amount doesn't equate to the losses they're seeing.
Yeah.
Right. So,
Oh, go ahead.
Oh, no, I was going to say, and then the other thing to think about is why I bring this up is in the past, Adam, these large companies have done such a great job of bringing a great customer service and bringing younger people in or newer people to the business and saying, hey, we're going to teach you what to do. And then one day you can take a part of my business or my company and you can run with it. They're not seeing that right now because those clients, let's just make this number up, 100 clients, they're seeing 60 to 70% of these clients leaving them in a given year. So
shopping for something
else. So again, if you have 100 clients, and these larger companies have tens of thousands of clients, but if they have 100 clients and 60 of them leave, it's difficult because now you're like, well, what am I training here for? What am I working here for? I don't see a pathway where I can be successful. So these companies that had such a large scale tipped in their direction have now tipped back into the independent side, which has struggled to compete with a pricing standpoint, and they don't have these smaller regional players. They're only national. So they're denying claims, they're increasing premiums, they are messing around with deductibles, and they're no longer providing the amazing service.
Mm-hmm. Yeah. And we've seen it too on our side where we've had big companies that we would broker out to that have left Nebraska.
Yeah.
So, and again, it's just forcing our insurance agents to get more creative on going and finding other better options for folks. And they are.
Yep. Well, and the other thing that's always been prevalent is on the independent side for our company, I should say, that we go above and beyond and explain some of the minor or minute details. That sounds boring because it's, to me, it's like, oh, what's insurance? But our insurance producers have been trained from the franchise that if you go above and beyond and explain some of these things, people are shocked what hail damage actually costs, what replacement costs. So to keep it simple,
Jeez.
you look at your house and it was $250,000 when you bought it a few years ago, and now it's $325,000 to replace the house. Some of these insurance companies, the larger ones, they have not been able to keep up with it, and you're maybe insured for $275,000 on a $325,000 rebuild. So again, when they come to you at some point and they say, hey, we need to increase your premium, we need to get you up to $300,000, you're still underinsured. And there's clients that are out there that if they had, heaven forbid, some kind of massive fire, massive water, a massive replacement to their house, let's say a car drove into it, they can't replace their house today. And these people are unaware, thinking like, oh, thank goodness my premium didn't go up so much. Their premium didn't go so up much, because of replacement costs. They haven't adjusted it properly, or they've increased their deductible without them knowing. So anyway, my point is, our producers are spending more time with clients explaining some of these things. And I think it's important for the public to know, like, if you have some of these large, massive companies that were doing a great job, you may want to ask them, what's my deductible? If I had hail, if I had water, if I had fire, what's my replacement cost? Now is a good time to ask that, because you'd be surprised your replacement cost is significantly less. And it's not like I do that to scare people, but I mean, who has an extra $50,000 to rebuild their house? Not most people.
Yeah.
Don't. That's a lot.
And back on like when you are having to file a claim, I've noticed too, like, the deal that I just told at the beginning there, where, that was a very simple, like, I'm going to say it wrong, but like there's one pitch, it was just a single gable roof, super simple roof to do. And
sure,
in my mind, I'm like, oh, back in the day, you could have done that roof for $6,000, maybe $8,000. And then we got two quotes on it, and one was 13, the other one was pushing 18,000. Oh my goodness. Right. Yeah. Like way more than, it was way more than everyone is really expecting. Yep. I think everyone was thinking like max $10,000. Yes. But I will say too, though, when you are having to file a claim, yes, we have the insurance stuff they're dealing with. That's not going away. Really? But it does matter who, like if you have a good contractor on your side helping you work with the insurance company.
To make fighting on your behalf, if you will.
Yeah, because like maybe insurance company says, oh, well, this is $20,000. Now it depends on your policy and all that too.
Of course, yeah.
Like you're talking about, but depending on what your policy is, it is good to have someone say, well, this isn't 20, this is actually going to cost 29,000 or whatever that is, to help them push that. And it depends on what their policy is.
Well, and sometimes they'll try to do a repair instead of a replacement.
Correct.
So if you have a good contractor that is saying, no, I've been in the business 25 years, this isn't a replacement, or excuse me, a repair.
You can't match it. You can't. Yeah.
It just looks bad. And then the other thing I forgot to mention, which you just mentioned, roofs. That's another tricky thing these large companies are doing is they're changing replacement. They're not covering roofs that are over 10 years old. Right?
Yeah. Yep.
So that's a new thing too, is they're saying we don't want any roof over 10 years old.
Yeah.
Well,
it's a rider in the policy.
It's a rider in the policy.
Does it exclude it?
Yes.
Totally.
Wow. So think of that. If you have a roof that's 12 years old, your insurance company has changed the policy to only cover 10 years, and you don't know, you're used to 15 years, let's say.
But some for them to check.
And then they're finding riders. Now, some companies have gone back from 15 years back down to 10, back to 15. But some insurance companies, they're very straightforward. They're saying, hey, just so you know, and they're sending a letter and they're saying, hey, your premiums changed $200. You don't read it. No one reads that.
Yeah.
But in the rider, it says your roof is no longer covered and you are now on the hook for hail damage. And there's zero chance you're going to get that replaced because you're just automatically enrolled. You've updated your terms and conditions. And
you didn't read the fine print.
No one reads the fine print. It's
no one reads it.
Yeah. So just remember that. Like, there's a lot of weird, tricky things with water, with especially in Nebraska, hail, and then roofs are just really getting just taken advantage of right now. So it's kind of sad. So again, I'm not telling you to scare you that every national company is doing this. The majority of them are, okay? But these regional companies now are stepping up and providing a way better experience, actually a decent rate. It's not the best rate, but the deductible is amazing. They're not doing percentage deductibles. So again, you can go back to that $2,500. Yeah, it might be $200 more a year, but it ain't $20,000 or $15,000, right? And it's percentage. So again, if you have a $500,000 house, well, that's a lot more than a $200,000 house. So some of these deductibles are getting crazy.
Yeah.
So anyway, so I guess to wrap it up, really think about some of these national companies out there are kind of sliding things in under the radar unwittingly. Think about this, okay? When you update your app for your, let's say, email or your fitness app or some of these apps are having access to your photography. Some of these apps are getting access to your phone data, and you're just hitting yep. You don't know what they're doing, right? Like, so you're just accepting it. So they're sliding things in. Now, if you're with some of these larger companies, honestly, what I would do is I would reach out to them and ask them, what does it cost for some of these deductibles? What are the rider that you've written on my house that I'm unwittingly knowing about? And what is going to happen? Because you're going to find that in Nebraska and Iowa, you're going to see another increase in the next 6 to 12 months because of these floods. Every company is different, but just be aware of this. They look at it quarterly or they look at it biannually. So each carrier is different, but they'll look at it every 3 to 6 months and they'll say, I have seen a difference of, let's just say it's 3% in Nebraska. We're going to increase the premium, right? So if they're seeing a differential of premiums not taking care of the expenses, there'll be a rate increase. So you just better be surprised that the next 6 to 12 months, you're going to see another increase with these companies.
Like what, 30% you think? Like what have you heard?
Anywhere between 40 to 75%.
Oh,
again.
Still, okay.
Still, because some of these companies, what they weren't doing is they weren't adjusting in time, right? So some of these larger companies were like, well, let's just adjust slowly. So then we don't have a massive exodus of clients. And then what they're doing is they're doing them in waves or phases. So they are increasing, instead of increasing over 24 months, they're increasing over 7 years. Depending on how long you've been with them, some of the discounts, some of the bundles that you get. But honestly, you'd be surprised. The bundle trick, and I can tell you, I worked at AT&T a long time. The bundle trick that these cable companies would do is they're like, oh, bundle everything. And we have a large cable company in town. And they'll say, if you bundle everything with me, you're going to get a discount here. Let's just say a home phone, wireless internet, cable, something else. You're going to get these massive discounts. That's not actually happening. If you a la carte these, you're going to get a better deal. So I tell people all the time, like, as an independent broker, just so you know, most of the time we actually have you at a different home, auto, umbrella, or jewelry, and you're getting massive discounts having separate companies because these regional players just specialize in home. Some just specialize. Right now we're doing a lot of pet insurance, and they're specializing in pet insurance. And they're giving a good rate, a good price, and they're paying out really well. So you'd be surprised how interesting some of these insurance conversations are. Don't sleep on it. Don't sit back and think, oh, the person's done a great job for 15 years. Look at your dad. He was paying, I think it was like $4,000 more a year.
Yeah.
And by us splitting up.
And he was with the same company for 15 plus years.
And we split up to 2 or 3 different companies and he's saving $4,000. So my point of saying that is the bundle, whether it was with cable, with cell phone, with insurance, the bundles, if you break them, you'll actually get a better discount. So it's kind of surprising. So everything you kind of heard about bundling is just not necessarily the case when it comes to insurance today. Okay. So again, I'm very happy that we have the independent side. I'm very happy we have the ability to shop around. As a real estate agent, why does it matter to you? Your clients unwittingly might be put with a bad person that you've been relying on for years.
Or they just don't know any better,
and they don't know any better. Yeah. You know, and again, I'm not saying they're willingly like, oh, this person's bad.
Yeah, they're not trying to screw someone over.
They're covering it in the terms and conditions, or they're saying, oh, I emailed them. That's on them. And some of these people are doing it because they're nervous. We've seen an alarming number of insurance companies close at an all-time high. And you're seeing a lot of insurance producers. Just last week, I interviewed somebody that was with an insurance company for 18 years. And they were with this large, huge company, 18 years. They literally stopped into the office. There was 3 employees, and they said, hey, we're shutting the business down in the next 30 days. We no longer can employ you. 18 years.
Yeah.
And so some of these people are just like, I'm going to get out of it. I don't want to stress myself. Insurance producers that were off golfing, off networking, enjoying their large business, if you will, of relationships they built for 25 years, it just doesn't exist because no one's going to stay with a company that increased the rate 400%.
Yeah.
So from a real perspective, see if they have other options. From a mortgage perspective, I would say the same thing. And from a client's perspective, ask more questions. get involved more.
Yeah, make sure you're talking about their premium and what their deductible is going to be, especially when they go to resell it.
Yeah.
If they run into it, especially during storm season.
Well, and really what you find is when you go to sell your house, they are like with their company, and then the new buyer can't buy this house because the roof is 15 years old.
Yeah.
And now the big companies are like, no, I'm good. Like, you have to replace the roof. And then the person living there is like, well, I'm not replacing the roof. You have to find a different insurance company.
Yeah.
So it's just kind of been a little strange lately.
Even a good simple practice could be writing in the offer saying this is subject to the house being fully insurable.
Yeah.
Yeah.
And we've been seeing more and more of that. So, but anyway, just be aware of what's going on in the market. Again, it's a change. The real estate agents a lot of them are like looking at the sideline or sitting on the sidelines, watching the news or asking questions. Everybody I'm meeting with, real estate agents that are part-time or getting in the business, the first question they ask me is, how are you going to navigate these choppy waters with NAR and these lawsuits? And I'm like, this is just a change. It's simple.
Yeah. We'll go into deeper into that here in a
exactly.
Yeah.
Yeah. We'll go deeper into it next. And it's the same with the insurance side. These insurance producers, I was just at a conference last week. There's lots of insurance producers, agencies that have been in the business over 20 or 25 years, and they're panicking. And we've talked about this before on a podcast. We love tough times because that separates the good from the easy, and that separates the workers from the non-workers. And at the end of the day, there's only a couple things you can control in your business. I can make outbound calls, and I can I can educate clients what to do.
Yeah.
I can reach out to partners in the city and explain what's going on and try to be an asset or a resource. What I can't do is I can't control these large companies. I can't control the deductibles. I can't control the percentages, but I can explain and educate myself on what's going on.
Yeah, 100%.
So appreciate y'all stopping by.
Yeah, thank you.